All right. Well, welcome to the Crash Lads podcast. Today I have Mr. Dave Lotan. Dave, it's a welcome to have you on today.
Hey, Danny. Thanks.
Good to see you.
Good to see you again.
And, we've got lots to talk about. Or maybe not. I don't know. But I think we should. There's a lot that's happened in the world. And you're active in the space, quite outspoken. I mean, you do lots of podcasts, and I've heard you on a few different shows talking about macro, the micro of the space, things like that. For our listeners that don't know who you are, what kind of introduction would be appropriate to give here?
Yeah, I always struggle with that. I guess I'm a veteran trader, investor in natural resource stocks. Juniors quite a bit. Occasionally I bury myself in a company and try to dig myself out by joining the board. So I run a large business that has, let's say, 70 positions in it, and then there's probably 5 positions that I'm close to 10% in, or over 10%, and 3 board seats.
So this is something interesting I didn't know about you, but we were just chatting before the show started, and you only take board positions in things that you own at least 10% of, for the most part.
Correct. Yeah.
Yeah, that's pretty phenomenal.
Yeah, well, I mean, it's only at the invitation of management, and generally when they've either lost access to markets or they're struggling with that component of their business. So the classic example is Aurion, where Mike had run a pretty good prospect generation business, but unfortunately, due to perhaps his own reticence and market conditions, the stock got sub 5 cents. I was pretty close to the biggest shareholder, I think, when that happened. There's no way to know. I wasn't over 10% at the time, but I had been giving him some advice and some help, and I guess obviously some market making behind the scenes. And then I had a guy working in my investment holdco, Gord Fernandez, who had been a great salesman, a bunch of places on the street, and I paired them up so that Gord could help Mike market, and I sort of thought that would be enough, and that didn't work. And then I organized the friends and family financing for Mike with a lot of big names out there who'd lost money for me, but were still good friends.
Yeah.
And they were pretty whiny about it. So finally, I just said, "Fuck it.
Yep.
Just going to loan the company money. Going to keep them from diluting at these prices, and let's just see if we can put them in a bit of a time machine and move the company from a bad market to a good market." And with plenty of good luck, and given we were sort of on the tail end of that great ice age market from 11 to 15, we got them out of it. And the next financing was 40 cents without a warrant in September 2016, and he made his big discovery a couple weeks later.
Now, with that story, I mean, I think you paved for. I mean, really, you did open the door for Finland in many ways with that story. That was a very pioneer.
Mawson had been a sensation there a couple of years before on a similar story with a whole bunch of high-graded surface.
I don't think it catalyzed the same effect, though, did it? Like, really?
The problem is they just took too much money from Sentient.
Right.
And Mike, who's a great guy and I have a lot of respect for, I think it was easy to fall into that temptation when Gilbert was writing him these big checks. And they let Sentient get to, I think, 35 or 40% at one point in time.
We bought a bunch of that, by the way, which our listeners.
The block.
Yeah. We were fighting over the block.
With Pierre Lassonde and Darren Morecambe.
I didn't mention who else we were fighting against, but yeah.
Yeah. Well, no, they got some too. Yeah,
I know they did.
Sure. No.
Wasn't sure that was everybody knew that, but yeah, I know for sure.
Yeah. So that initially gives a CEO some comfort and some runway. And the problem is, if the money that you get from that very generous shareholder doesn't produce a market effect, then every time you go back to them for capital, it's going to be a rights offering, and then a more oppressive rights offering, and then an even more oppressive rights offering. Because if they're going to be your majority financier, then they might as well just own more and more of the company at lower prices. So I think Mike got into a bit of a spiral with Sentient, and of course, they were drilling under a Natura 2000 for this Ray Palat thing, and that got quite controversial. They got stopped by the State Forestry Company, and then they ended up having to go to court to drill Philosophically, I don't believe that companies should spend money on security, from cartels or whatever in Mexico, and I don't think you should spend money on litigation.
Yep.
And unfortunately, the outcome for their Finnish properties has indicated why they're not worth that much yet. And for you guys, I think this is a great trade, and I think you're going to make lots of dough there. And I think the Southern Cross thing is a
That was
spectacular
the arb we were
discovery.
searching. Yeah.
Yeah, it's brilliant. And so, one of the problems was uranium. I mean, Mawson was uranium play early on, and that was uranium and high grade gold. And so I think as the European Union embraces its need for food, shelter, the basic necessities of life, that they'll begin to pay a little bit more respect to these companies that are sourcing the raw materials that make society work. And while you can't say that about gold, it's an important global commodity, and it's a really important source of foreign exchange, especially if you're in the developing world. So I think better times lie ahead for that play.
Yeah. No, it's an interesting. I guess for us, in many ways, it's a bit of a bonus, right? Because you've got the value of that company was really underpinned by the Southern Cross bit,
which is just generating some mind blowing.
Oh yeah, they're onto something.
Bulls.
Yeah, they're onto something there. So who knows? I mean, again, like anybody listening to this, do your own homework. Don't buy anything. Don't listen to what we say. Don't listen to what I say.
And how did Mike get that ground? I mean, it's right in the shadow of Fosterville.
I don't even know the story of the inception story. I'd love to have them on and talk.
You probably shouldn't know.
Yeah.
Yeah, who knows what he did?
Yeah. It could be some, who knows, right?
I'll ask him the next time I see him.
But then you guys came in there.
Sure. Yeah, so Mike originally had gotten a piece of land from Dragon that we joint ventured to B2, and actually wrote the check to get him out to site with B2 to have a look at that ground. And then they're just such an awesome company. Mike was on his knees. There was no money left in the company. He was in Vancouver visiting with a promotional group that had suggested they might take the story on, and that didn't work out. Gordy was with him and got a phone call, and they got a meeting with Tom Garrigan the next day. And Mike goes in the door, and Tom says, "Well, yeah, hang on, I just got to get one of my project evaluations guys in here." And in through the other door walks Doug McLaughlin, who Mike had worked with on a Peter Talman deal like a decade before. And Doug's like, "Mike Basha." And from the moment that they identified him as good people, they had a CAO to us in a week that was friendly. They were on the property in a week, and they were extremely fair, including building option payments into the joint venture, which are, we still have the stock they paid us. It's worth $2 million now. And this is for a company that had no money, was sub 5 cents and probably trading for sub $2 million. So they're just fantastic. And anyways, the company didn't really respond to that. So I bought stock for the balance of the year, and then had to buy a very big shareholder out the next year, just when we thought things had turned. And I instead of keeping that stock, I sliced it up and seeded Chris Beer and Ono Rutan and Kevin McLean. No promises, but I bought almost 7 million shares at a dime and just passed it on to those guys and to a network of guys that we trusted and thought would hold it and maybe trade the stock. And the message was, look, you're going to see Dave probably pretty active in the market here, and do what you think is right. And so I got back on the bid and was active in the stock through the spring and summer that year. We got the 40-cent deal done, and then literally within 2 weeks, they stumbled on all these high-grade boulders. And they're gigantic. It's not boulders. It's, giant fragments of quartz. We had the stock wound up pretty tight. I had it in good hands. Everybody, I think, who knew me understood that this was a real story, and we were going to do everything we could to make it work. He had to sit on that for a few months. I didn't even know about it because it looked like all of the surrounding land was about to be dropped by S2. Mm-hmm. And so I think they dropped it in January, and they'd made the boulder field discovery in October. And he was able to He was able to turn a 3,000 hectare land package into a 15,000 hectare land package. And then press released it a couple weeks later, and the stock exploded. We were raising money at $1.50 from Ross and Eric and John Tognetti and some of the really good guys in the business.
I remember the excitement around that.
Yeah,
It was crazy.
yeah. And then I knew that it was very likely he could raise money from Goldcorp. They had already expressed positive indications. I had a couple of friends over there, Mike Skeed and a couple of guys, and they didn't tell me anything, but it was very, very clear that they were giving it a good look. And again, John Tognetti and I have been friends for years, as I was with many of the other people who were buying the stock north of $1. So I thought, okay, I better join the board because this is going to take serious capital and we need to do all the right things. So given that all the Goldcorp strategics that I had seen over the years had significant conditions in them, step-up levels on subsequent financings, prohibitions on borrowing money or selling a royalty, board seats, and given that I think those rights are the most destructive aspect of any strategic investment, I just wanted to make sure that we organized a politely competitive situation so we could get rid of those things if they were in the plans. And so anyways, that involved Kinross, who were also friends of mine, and a couple of other big companies. And by September, we were able to sort of nurse those two together right to the finish line and get, I think it was $16 million at $2.30 a share, and really with only pro rata rights. So certainly been harder since then, but it was a good story.
Yeah,
very good. And it is a good story. I mean, it
was the bottom of the market too. I mean,
Yeah.
I think a lot of people don't remember or may not know that those were really tough times. That was like 2016, 2017.
Yeah.
2018, I want to say. Was it even 2019? Like
the Kinross money came in 2017.
17, yeah.
And then Goldcorp bought 5% of the company in the market 2 months later at $2.80.
I remember that pocket, and
Yeah.
it was like an icy, dead winter in the mining sphere.
Yeah.
And then you had the Ruperts, and there's a few other companies in the proximity that started to come up and sprout up, and that whole belt sort of took off, and that's what I mean. You guys really catalyzed
the Rupert discovery. I mean, and I do think that our success was helpful for James in getting money in at
100%.
decent prices. It was sort of a moribund story for 5 years, trading, just sub $1, just above $1, and everyone thought Harry Dobson was keeping the value of the stock at too high a level.
Yep.
And they finally, at that level, were able to raise a bit of money from Agnico in a very tough deal, 14%, three-quarter warrant on that deal. 2 board seats, up to 2 board seats, technical committee, all those things that I'd rather gouge my eyes at than give away in a strategic. And but they made the Ickery discovery with that money, and 10 drill holes, $800 million of market cap.
Yeah, the rest is history.
Yeah, and that's torque. That's the definition of torque.
Yeah, well, that's why we're in this business, for those magic moments.
Mm-hmm.
So you brought up some interesting stuff. So uranium, the political sphere. I know you like to talk macro, and why don't we do that a little bit?
Okay. I don't like to talk macro, but I generally feel obliged to. It's a rabbit hole, but yes, I'm delighted to talk about it. Sure.
Let's explore it.
Yeah.
So, if you don't like to talk about it, we don't have to.
Oh, no. I think that it's the number one thing that gets people bored and exhausted on these podcasts because everybody talks macro.
Yeah, well, exactly. We usually don't, but I thought that you did. I've listened to you on other podcasts and I heard that you did, so I was going, maybe.
Yeah. Well, I'm definitely one of the few guys in the space who's been involved in these multi-billion-dollar debt markets. Most of my business, I started my professional career after becoming a public accountant, running what ended up being $1 billion mortgage business for the Polar Capital guys. Mm-hmm. And then I ran a credit arbitrage business, which depending on how you measured it was anywhere between $1.5 billion and let's say $7 billion in size. And then I went to Teachers for a year after that just to do a favor for a friend there and was running billions of dollars of risk in credit and interest rate markets. So in that respect, I suppose I have some unique experience
with macro
in this market.
Yeah.
or as far as people participating in this market goes. But having traded those markets, I think recognize that no one knows anything. And so I'm happy to talk about it. And I think that one of the things that drove me to this market is that sentiment and flows, or your understanding of flows, is so much more valuable in a market of this size than it can be in a market, let's say, the size of the S&P 500, or pick your Russell 2000 subsector.
I agree with you, and I think that's why we bought CEO.CA.
Yes,
I mean that was
and which I thought was brilliant.
Yeah,
and I think the part of what's important about this business is understanding that really there are two things that make a stock go up: more buyers and sellers, and advertising.
Yeah.
And anyone who's ever watched, I remember I'd watch that Kiefer Sutherland series 24 that was on Fox for a while, which was a unique show that supposedly every episode was one day in the life of this.
Oh yeah, I watched that one too.
Yeah. And the number of times they said, well, boot up the Cisco system router, and it's like, what? They're not selling routers.
Yeah,
they're selling stock, and I think that. It's done so much bigger and so much better with product placement in corporate America. But I also think that the crypto guys probably looked at the way markets like Vancouver function and thought, oh, we could do that so much better. If we only had a lightly regulated opportunity. I mean, we built these incredible media platforms, and just think about the pump and dumps I'm sure they didn't think of it that way. But,
well, I don't think you're wrong. Mm-hmm. I mean, I've talked about this on a past episode. I was into this space a bit, and there's a fungibility to gold, etc. Mm-hmm. The reality is that a lot of people look at the comparatives between the sort of gold trade and the crypto trade, and some of the parallels, and
mm-hmm.
The crypto guys kind of came in off the same, piggybacking onto the same narrative. And vacuumed up a lot of the capital but the reality
mm-hmm.
is that, the crypto community was a greedy community. It was kids looking
mm-hmm.
for fast money, fast returns. And really the mining space wasn't offering that.
Mm-hmm.
And so I think if you're out there marketing, if you have the right marketing plan, and whether it be UFC fights, and you're putting
sure.
crypto things on their ass cheeks,
Formula
Formula One,
yeah.
whatever it may be, right? And
mm-hmm.
you get out there and throw that. We don't see that in the gold space at all.
Mm-hmm.
But the other thing is that it was so volatile, so crazy that people could invest and then open up their e-wallets and see triple or quadruple the money one day and go broke the next day, but they're okay to play the roulette table.
Yeah, I guess my point is they just looked at this market,
yep,
which is all about running small corners and advertising. And so when you think about every time somebody builds a new co here, that's the most exciting paper anyone can get.
Sure.
That half-cent paper that you get when you're the founder of a junior co out of Vancouver, Toronto, or you mention it, or you name it, and then what you're really looking for if you're buying that paper is you want to get a management team that knows how to keep that all pegged up, and that knows how to get a distribution event,
mm-hmm.
And to do it in a way that still leaves the company with the possibility of raising new capital at higher prices, and that's really nirvana in this company, and that's what Frank Justra does really, really well with his plays, and Robert Friedland, you
yep.
name it. And I'm not suggesting there's anything unethical about that. Those guys know how to get great assets. They know how to get things to market that the public wants, and they know how to run a stock.
Mm-hmm.
And that last stock operation or stock jobbing, which is sort of old style Jesse Livermore stuff, which sort of slowly and surely got arbitraged out of the big markets, the S&P 500, the U.S. markets, global markets. That remained a prominent feature of Vancouver stocks. It really looked like the old curb market in the United States, and so I think the crypto guys looked at, the basic fundamentals of stock jobbing or running a stock operation, and they thought about how great that opportunity looked if you applied it to these token markets or these exchanges, which were free, at least at the time, from mainstream or SEC regulation, and they managed to stay years ahead of the regulator until now, and so they thought about all of the levers that we think of as being valuable in making a company valuable, reducing its cost of capital, and about the market structure itself, and they just did it in crypto 1,000,000 times larger than it gets done in these Canadian markets.
So you don't think Cumcoin has got a bright future?
I haven't heard of that one. That's a new one for me.
There's one called Cumcoin,
and I'm sorry to say that all of my Doge is not going to be not going to make the life-changing gains that I'd hoped it would.
Oh yeah. Oh, so you went with it. I mean,
I own no crypto.
Okay, you know what? Yeah. Okay. I mean, I sat it out totally. I watched it go by. I knew there was going to be money to be made, right? There always is. And there'll be some champion that arises out of the ashes.
Without a doubt.
That it's likely going to be Bitcoin. That would be my guess. It's probably what everyone's guess is. And because of that, that's probably why it's going to be Bitcoin.
I've often wondered if Gresham's law will take all Bitcoin out of circulation. So, the premise that bad money chases good money out. And so you would have situations within a sovereign jurisdiction where the guy running the money would start shaving metal off coins. And of course, citizens would begin to notice that some coins were lighter than other coins. And so the heavier coins would get put under the mattress, and the lighter coins would be the only ones left in circulation. And so that's the sort of theory behind it. And if you assume that Bitcoin is that unshaved, beautiful, pristine, religious version of crypto, does it eventually become 21 million Mona Lisas that just don't ever trade anymore? So maybe you'll have an insane quote from whoever is still quoting it at the time, but it won't be liquid, and it won't serve a purpose other than for 21 million individuals who are just looking for someone who can pay that next price.
I think it's turning into a Pokemon card. I personally,
Sure.
I think like it's a collector's thing. It's I mean, the argument against gold is that, a lot of times people will say critically that, well, you're never going to spend your gold. And it's like, well, yeah, but that's fine. You can exchange your gold for dollars, and that's always going to be a thing. And gold, a true fundamentalist with gold, let's say, would say, well, it's a preservation of your wealth. And so
I'd say that it's being spent right now and in massive international transactions.
For sure it is, yeah.
And this is, this unfortunately, for the people who lost money as a result of the fraud that FTX was, the ridiculously transparent, obvious in retrospect fraud that FTX was, this weird-looking dude sitting in front of Congress and bribing, Republicans and Democrats alike. What happened there was the end of institutional adoption. Mm-hmm. And so, there were famously pension funds involved in the FTX investment, and, people talking about how, well, we put money with FTX because it's the picks and shovels trade and it's the safest trade you could be in. Mm-hmm. And people like Ontario teachers were horribly embarrassed to have burned $120 million on FTX, not because of the money, because clearly you did no due diligence, or you missed, you missed that part of the trade that sophisticated investors are never supposed to miss, which is that the emperor's new clothes are no clothes. And so the $3 trillion that crypto was at one point needed $3 trillion of additional buying if it was really truly going to be valuable. And I think what happened with FTX is that crypto is no longer available as a currency hedge or diversifier for very large pools of capital. It will not be in pension funds anytime soon, if ever. Gold now remains the last great currency hedge that you can use at scale. And so I think, everyone's concerns about gold and its fungibility, that's why the futures market came into existence in the first place. And I venerate Eric. He's a great guy. But, this concern about, paper gold versus physical gold, I think is not, I think that's a red herring. I think that ETFs and futures made gold much more mobile, much more portable. And then on top of that, you have the fact that it is the primary savings vehicle for the unbanked in developing markets, which means it's used in millions of tiny transactions, I think, on a daily basis.
Well, to your point, I don't think, if crypto was ever going to be that with the FTX scandal, it's officially not going to happen. And then, but further to that point, I don't think even on a local basis, on a individual basis, that anyone who's buying it was ever buying it for that. They were buying it to double it. They were buying it. Yeah. They were buying it to trade it.
The jackasses who were proud that they bought a pizza with a Bitcoin.
Yeah.
And
there's very few of those.
And decided to forego 60,000. Well, there are a few though. I think there's one of the original Bitcoin maxis paid like 20 Bitcoins for a pizza or something like that.
Right, I heard that, but I mean that to prove it would work. But today, in today's day and age, is anybody spending Bitcoin? Is everybody going to?
Who would dare?
Who would dare? It's a trade. It's a potential trade. I mean, that's what they're buying it for. Yeah. They're buying it to open their wallet tomorrow to see it, or their crypto wallet to see it double or triple over.
And it was a beautiful idea that you couldn't make any money off of.
Yeah,
it was designed by whoever designed it to try to cut out all of the middlemen. People worked very hard to try to come up with a way to use it in payments and to make money on the payments, but that defeated the entire point of Bitcoin. And then the grifters seized upon it and copied it and copied it and copied it over and over and over again, and created all these situations which cost so many people so much money on anything that wasn't Bitcoin.
Now, I think this just kind of provokes an interesting topic with cryptocurrencies, Bitcoin, Ethereum, etc. The mining of these coins had been a thing, and that was whether it be like Hive Blockchain or some of these other companies that were set up and public companies, just to name a couple that were set up to do this sort of, commercial scale mining. And China, like kind of early in, China kind of shut that down domestically too, because there's better things to do with their energy than to feed it through GPUs.
Yeah.
Where does that leave us? Because obviously now energy is of primary concern. You talked about Europe. We talked about uranium and how that possible landscape. But it seems like now we're seeing some sort of convergence from sort of all walks of this landscape, whether you're on the far left or you're on the far right embracing nuclear power as part of an energy transition plan. Let's say you think fossil fuels are the enemy. Nuclear power still holds court in the transition strategy. Whether that's you're on the far right and you're saying you should be making, or even in the moderate middle, mushy middle, saying that energy should be as cheap as possible for as many people as possible on the planet. So, what are your thoughts on the uranium space? Is that something you look at?
I didn't have much luck trading uranium in the tail end of that market, and that was a big lesson for me. When things started to break in our markets, there were all kinds of junior companies out there that had been very valuable. And if you ran a model where you were going to look for regression to the mean, so they traded here, now they trade way down here.
Sure.
If it was an S&P 500 stock, you might expect it to regress to that middle ground. That's a hugely losing trade in this business. Once stories and narratives break, they never come back. And so I traded a little bit of uranium after the peak of it, and then just sort of abandoned the space. I got a little bit of alpha when it started to go, because by then I'd been focusing on structure, and it had been rolled back to 20 million shares, and they started hitting, these fantastic rates. And even though Fukushima, I think, had already happened, it was up and to the right at 45 degrees, and really structure had become not my primary focus, but structure was an incredibly important parameter for me in investing by that time, and let that go a little bit too early. and I bought some next gen. Warren Irwin and I are pretty good friends, and he was thumping the table pretty hard at 30 and 50 cents, and I think Sheldon was blowing the paper out for.
Well,
reasons.
Sheldon was gone, but we had to get rid of it because of the oversight committee. Yeah.
Right.
Yeah,
Okay.
we had to get off the paper.
Well, and there's the explanation. So, and this is something that I generally want to understand is some I want to have some expectation of forward flows. I want to sort of understand who's selling, and generally I think that if you're going to buy anything in the world of juniors, you should understand why you're getting a bargain, what the technical reasons are for the flows, and you better know who you're eventually going to sell it to. And that was always my issue with uranium on that side of the basin. I mean, after the Hathor acquisition, I guess you would have believed that Areva and Rio Tinto were still potentially active in the space. There was a BHP and Rio Tinto.
Areva's on the west side.
Yeah, but I wasn't sure who was going to come over to this side of the basin.
Oh, okay.
And so I'm good for a trade on that kind of stuff. But if it isn't obvious to me who should buy something, and even when it's obvious, it often doesn't happen. But if you can't at least tick that box, maybe you just better be a tourist.
Got it.
Mm-hmm.
So,
but sorry, on the macro picture, and again, just to stay in that rabbit hole for a little while longer before we go straight to juniors, I think it's a great trade, and I think that it's great for humanity to see that this particular aspect of green propaganda has, I think, finally had a spike driven through its heart. It's just nothing but good for mankind. When you think about the fact that we had discovered means to control this incredibly dense form of energy, and the value of energy to mankind. Energy is life, as Thunberg says, and energy, of course, is food and transportation and all these things we need to function and have a high quality of life. The fact that it's amazing that Germany hasn't caved yet, but the fact that Sweden is caving, and the fact that Canada went 180 degrees.
In some ways, Germany has caved. I mean, with the
lignite.
Yeah,
they've caved and they're burning coal.
Yeah, they're burning coal.
Yeah,
exactly.
so but they stubbornly refuse. I mean, I think they canceled the decom of a couple of these things, but Raybeck or whatever his name is still fervently anti-nuke. And let's see what happens after next winter.
Yeah, it's exactly. We had a mild winter, and they were very lucky for that. It's interesting to see. You mentioned that it's got a hole through the heart, and I would agree in some ways that I think the chips are stacking up on that side of the balance now. Mm-hmm. The reality is, where does that put ESG? Because we've transformed the investment landscape pretty heavily. I mean, a lot of money is mired now from playing in spaces like mining, unless they have a sound ESG plan. And of course, in my opinion, and this again is just my opinion, that a lot of the metrics, a lot of the measures for ESG, the principles of responsible investing, et cetera, there's a lot of opacity there. There's a lot of confusion. There's a lot of these things are unquantifiable in many ways. And so there's subjectivity.
An enormous amount of grift.
Right.
Enormous amount of grift. And as an interesting example of that, the guy who's running one of these carbon credit registries, I think it was called Vera, just stepped down in a scandal. And there have been a couple of very high-profile white papers published recently about the worthlessness of many of the carbon offsets that have been purchased by some of the big oil companies, and heavy criticism of them, and criticism of the registries that ratified these offsets as being legitimate. And I think that we hit peak ESG really just before COVID, and it sort of flattened out during COVID as this sort of this debate between the primacy of the individual's rights versus the rights of society was debated ferociously in front of all of us, and we were all subject to this, and we were all forced to think about this. But the ensuing inflation meant that for the first time, the financial consequences of ESG were finally being visited on the developed world. And it was very easy for environmental activists to make demands for an energy transition from the most efficient system, most evolved system mankind has ever conceived, and to demand this regression to a knowing an energy system that we know to be fractionally efficient, very diffuse, and about which we know little, just in terms of how it will function on the grid. These intermittent sources, we keep packing more and more of these sources onto the grid, and then you get disasters like Texas, and you nearly, I think, had the grid fail in New England this year. They had a diesel fuel crisis there, and so now the net result of all this is Germany is deindustrializing, and energy poor developed countries like the UK and Turkey are paying enormous prices for energy and food. In the UK, they're subsidizing them aggressively by borrowing at the federal level, but it's still been an inflation shock there. And so that probably was the peak of ESG. Now that everyone in the developed world has to pay for it, ironically not Canada and the United States, because we have abundant energy, food, and water. Now, I think it'll be controversial going forward, and the sort of runaway freight train momentum that movement had will have to be. It won't be taken forward unless there's a pragmatic context around it.
Yeah, I mean, I guess where I was going with it was that, a lot of this stuff seems to be built off the back of,
Yes.
the core spine of it is the we'll call it the alarmism of climate change and the interventionist response to that, vis-a-vis carbon, vis-a-vis taxing, vis-a-vis, net zero aspirations, costing people a lot more money than I think they were expecting. I mean, there's a certain altruism that I think resonates with everyone about making the world a better place and being able to embrace these sorts of ideas. But when when somebody said, well, you might have to spend, 3 of 7 days of the week in a snowsuit on your couch because you can't afford to heat your house. I mean, if that starts to impact the disenfranchised aspect of society because they just can't keep up with some of this stuff. It's just like, the spending, these provisions are being made too quickly. Does that all of a sudden cascade down to some of these after effects, the ESGs, these other kind of things that are bolted on top of it?
Well, so the fact that the sacrifice is now being made in the developed world is certainly changing the thinking on it, and these were inflation shocks,
right?
Not mild inflation. And I guess if you were an evil ESG advocate and you had a whole bunch of money invested in ESG type ideas like wind and solar, you might just hope that the inflation was gradual and not sudden. But on top of that, it was now when you at all these COP conferences, I think we're at COP 28 or COP 27. Now all of the little countries who are being told that they can't use the densest form of energy known to man in order to develop the standard of living and the quality of life for their people, are demanding reparations. And if you take this thing to its logical extreme, the nice people who live in Norway, who have this fantastic sovereign wealth fund as a result of having only 5 million people and one of the greatest oil
North Sea
resources in history, and as a result have this massive pool of capital, I suppose logically they should simply take half of it and give half of it to all these countries who are going to be denied this great and fortunate circumstance that they fully availed themselves of. And I don't think that's going to happen.
I don't think that's going to happen either.
And so, these COPs, these I'm not sure what it stands for, these conferences will eventually degenerate into more and more strident demands from smaller countries that are either being affected because, like the Maldives, they're supposedly going to be underwater in 20 years, or countries that in Africa that are being told they can't develop their hydrocarbons and they can't develop their fertilizer deposits. They'll just be asking for more and more money, and that will be that will change the narrative.
It's amazing to see. It's just amazing for me to see that as aggressive as all of this interventionism was on the energy front, the agricultural front was also selected as being a forefront contributor to the terrors of the climate and the all that kind of thing, and
algae blooms in the Gulf of Mexico.
Right, exactly. All these atrocious allegations against. But I mean, again, when you think that the West was chosen as some of these countries like ours chosen as the sort of principal places to launch these sorts of initiatives and sort of guinea pig them for everybody else to try to slowly, transition slowly. And then suddenly, not to hit that hard enough, not that they get hit hard enough by energy costs, but to compound that with like grocery costs and agricultural, like the pressures that puts on goods and services. And how do you untangle that from inflation?
Yeah, it's astonishing to see sort of strict compliance expected in these smaller countries. Canada has 4 people per square kilometer. It's ranked 200 and let's say 35th out of 250 countries on Earth, and most of those people live in the Windsor-Quebec corridor. I think 50% of the population lives in this little scab along the 401, and then there's a few other red dots on the heat. It's actually a fantastic heat map if you bring up a population density map for Canada. I mean, so for the large part, there is no one in most of this country, and so whenever I see a permit being challenged or poor Bruce McLeod having the Bathurst herd suddenly running through Savina's claim package. There's a lot of room for caribou in this country. There's a lot of available habitat, and so
there's a lot of paths they can take.
Yeah. So you see just how empty Canada is, and if you were to take these urban areas around the Windsor-Quebec corridor and then around Calgary and Edmonton and I guess Regina, Saskatoon, Winnipeg, and Vancouver out, it's probably close to 0 people per square kilometer. And so it's interesting that we are such an active country when it comes to strict compliance with all of these ESG or all these climate suggestions. When you think about the fact that the country, much of which is muskeg and wetland, is just a giant carbon sink. And we really, by comparison to the rest of the world, have very low emissions.
Yeah, I've done the math on it. So when we were looking at when the carbon market sort of sprouted up, CJ and I went on like a massive little Hardy Boys adventure of pulling out the calculators.
Hardy Boys. That's fantastic.
We went total Hardy Boys. We spent 7 Gs in Ontario alone doing title searches on private lands up north. And it was pretty amazing to see the government basically scooping up and buying patented land at unprecedented rates in Ontario alone. And then if you look at the other provinces, they did the same. And then suddenly you have that same lowest land parcels being handed over to the likes of TD Bank to sponsor a new carbon sink project, which they, launched their new, credit trading platform.
And all we have to do is nothing.
And all we have to do is nothing and watch the trees grow. I mean, I think, forest fires are actually showing some of the volatility in that market. I mean, a lot of these credits were pre-sold and, so the secondary carbon market, the credits themselves, the offset credit market, is a complete and utter house of cards. It's all, a surprising amount of it is predicated on things that were already growing there. And this land belongs to everybody. It doesn't belong to...
Agreed. Yeah, I really was quite excited by a couple of stocks that came public around that because I thought, well, if I'm going to get bent over by the ESG crowd and all of my mineral and fossil fuel investments, I might as well figure out a way to trade this. And the Star Royalty guys had a green aspect to their business, and they came public in a very clumsy way and ended up getting, Dutch auctioned into a unit deal that got sold to hedge funds. And I bought 3 or 4% of the company after the IPO failed, and I was really interested in the fact that they were willing to grow that part of their business as the gold royalty business really wasn't working for them. And they got a strategic in from Agnico who are interested in that business. They're working on some other stuff, but of course, that deal took so long. By the time Agnico put their money in, and I think it was obvious to people, oh, look, this little junior company is thought of as a great opportunity for big carbon emitters. The Ukraine war was upon us. And of course, that just crashed the carbon permit market, which is traded in crane shares in Europe. Just crashed that market. And Star and a bunch of these other guys are in voluntary compliance. They're selling these virtue signaling carbon credits to Apple and Amazon and all these companies which have pursued an ESG philosophy, diversity, equity, inclusion philosophy, but are huge carbon emitters. And that's a good market. But of course, there's plenty of stuff in that market that is just outright fraudulent.
Well, I think it's that, and I think it's the fact that when you look at the purchasers, then just pushing that cost down to the product, down to the customer.
Sure,
that's all that happens.
Mm-hmm.
I mean, so.
Well, it doesn't actually reduce carbon emissions.
It doesn't reduce carbon emissions for starters, and then it makes things more expensive, and then the disproportionately affected are the poorest people on the planet.
As is always the case.
As is always the case, So I think.
Right up until they finally start voting for someone who will solve the problem. And that's all these things happen so much faster in the United States. In the end, this has been going on there for the longest period of time. There's been a lot of media about this in the United States for the longest period of time, and that's what delivered Donald Trump to the presidency in 2016. Is there was already a great degree of concern about these policies that were being driven by the mandarins and the intellects down to the old Rust Belt, where manufacturing had been effectively sold for cheap Chinese goods in free trade agreements. That, I believe, is the narrative. Not necessarily my opinion on that, but
sure. Yeah. No, I look at both sides of the argument, and certainly have my own beliefs and on what all that kind of looks like, or how this is all playing out for people, but. At the end of the day, it's a democracy and people voted for this. And I think, I don't know if they knew exactly what they were going to get. I think they were warned, aptly warned, and whether they, that's what people chose, and that's what these politicians did. And eventually they're...
Right up until the time that we're all now paying for it.
Correct.
And so you've seen a swing to the right in all of these regional elections in Europe now.
Yep.
And it does seem like there will be major movements to the right in the national elections, which are due in the next few years. So I would imagine you won't have the same government in Germany anymore. I would imagine that you won't have Macron in France anymore. Sweden already moved to the right, has gone anti-immigration, is now moving in favor of nuclear. Finland swung to the right in their last elections, and there's a great degree of climate policy skepticism in one of the groups that has come to power there.
Netherlands.
The Netherlands, this Farmers' Party is winning all these by-elections, and I think rightfully expressing their view that destroying some of the most productive farms on earth were threatened to be taken offline forever in favor of cutting nitrogen emissions. And I don't think that's going to happen now. And we'll see what happens in Canada in the next election. I guess we'll see what happens in the United States.
Now, clearly, we've had a very bullish run in the space of lithium, the battery metal space, the copper space. And you know what? There's some real substance there for sure.
Yeah.
Let's park the altruisms and the ideologies for a moment and have a look at the functionality of me having a battery-powered leaf blower at home that I like to smash the pool cover with. And then same thing with...
You should try a battery-powered chainsaw. Oh, my God.
Oh, they're amazing. No, I got one of those, too.
They're fantastic.
Yeah. The little steel battery-powered one's awesome. And then... the battery-powered toothbrush. I mean, look at this is these are becoming awfully convenient and a luxury for all of us. And in fact, it's awfully nice being able to plug the car in at home. And
it certainly would be a better world if we all drove electric cars, and if all of the capital that's been invested in the ICE economy, the internal combustion engine economy, years ago had gradually converted over to electric because they're superior products. And when electric cars were initially being considered as a reality, the impracticalities of sourcing all the raw materials was known and was the central focus of many of these companies. And I even remember in the early 2000s, a company out of Israel that was a super popular startup where they were going to build stations all around a city where you would pull in and they'd pull your battery out and put another battery in. And so they would do away with the charging issues and they would centralize charging and centralize battery storage. And the only problem with that was it presupposed that electric vehicles were a convenience and that the complete focus on them and their manufacturer would be the minimum environmental footprint. And so they would have all looked the same. Uniformity would have been important. Performance wouldn't have been important. And of course, as great an idea as that was, it didn't have a lot of profit opportunities for industry. And of course, it's no coincidence, luxury is the most durable category for margins and for investment returns in history. Louis Vuitton, LVMH, I think is one of the most valuable companies on earth. Apple managed to turn wearables and iPhones into status symbols, luxury items. And how did people finally go bananas for electric cars? Luxury. Tesla is a luxury product manufacturer. And unfortunately, that model, which is the one which is driving penetration, is incompatible with this model of everybody driving golf carts around the city and pulling into a central depot and having their battery pulled out and a new one put in. So I'm with you. I think that electrification, if pursued in a more rational fashion with less choice, less vanity, I think it's a great idea. And I think to the extent that fossil fuels are incredibly valuable for what they can do for mankind, we should probably conserve them to some extent.
Yeah, exactly. I mean, there's some things like you're never going to be able to fly a plane with batteries. So at least not with modern day technology.
Not one that I'm going to fly on.
Right. Yeah, exactly. And so I guess to dovetail it with our conversation we just had on climate and on some of this political shift that we're observing, do we think with the bullishness in hand on the lithium space, on the copper space, would somebody be then concerned on the long-term kind of bullishness with the copper and the lithium and the cobalt kind of market? What's your feeling on that space? Is it overbought today?
So we talked about psychology and flow being really important parameters when you're making investment decisions and having some understanding of what you expect forward flows to be in their direction and being willing to play the Keynesian beauty contest and trying to embracing betting on who the other judges will vote for in the beauty contest. And that's important. But probably the most important source of alpha in investing is government policy. And you'll never make more money ever than getting government policy right in advance. And in theory, that's usually not legal. But abrupt changes in government policy can also be very profitable for people who are nimble and thoughtful and can get ahead of it. And, cannabis in Canada was a great example of this. It created just this massive source of alpha. And you didn't really have to be that nimble. It wasn't easy. You had to figure out eventually what would work and what wouldn't, and so the electrification of all things, since it actually does make sense, not necessarily with the plan that's currently under consideration, but since it actually does make sense, I think that those policies are not going to go away, and one of the reasons that I really continue to like gold. And that's been sort of 20 years of my career, really since 2000, 23 years, is it couldn't be more inflationary than to have all these advanced economies spending trillions of dollars to take out effective, efficient, evolved energy infrastructure and replace it with inefficient, unevolved, ill-understood energy systems. It couldn't be more inflationary. And so gold in a way is a derivative trade, always on government policy. I mean, I think we all believe, those of us in this trade, that government will continue to print its way out of problems and money supplies will continue to expand around the world. And there are periods when the U.S. dollar is very vulnerable, periods when it's not, and you do well in gold during those periods. But in the end, if you own gold in Argentina over the past 20 years, it's been a lifesaver. If you own gold in Turkey over the last 20 years, it's been it's saved your life. And I think that's truer to the degree that you're in an economy that is energy poor and that is advanced. I think that's true, and it was true of the United States when oil was going to $140, and all you could see were endless energy-driven trade deficits to the Middle East, and they would take these U.S. dollars under the old Bretton Woods system and think about exactly how they needed to get off those U.S. dollars as fast as they could, and lots of gold buying out of the Middle East, and then as it turns out, venture capital.
Yeah,
they were jamming money into SoftBank, and of course buying a lot of weapons.
Yeah, it was crazy. They've been very active. Mm-hmm. They've been very active with getting off of those U.S. dollars and injecting them in all sorts of corners.
And it's likely to happen again. The Middle East GDP growth there is the highest in the world right now, and if it's true that we've reached peak shale in the United States, has been suggested by Gehring and Rosenschwag and a few other investment analysts that I greatly respect, then probably the shale miracle that took the U.S. from 2 or 3 million barrels a day up to 12 million at the peak, and which probably broke the gold price in 2013, because all of a sudden I think it became obvious to anyone watching who had a good understanding of macro, like the U.S. could actually be energy independent. Mm-hmm. These shale fields are widget factories. You're not looking for oil. You know it's there. You just have to use a lot of energy and science to get it out. I don't think it's a coincidence that after this great, incredible these incredible gains from 2009 to 2012 in oil production in the Permian and some of these other fields, that gold collapsed in 2013.
So when does gold come back? Are we back? I mean, some would argue that the price environment of today is as good as we could ever have hoped for.
It's almost an all-time high.
Sure.
Yeah.
And do we hope that it goes higher? Is that like, I mean, we can all agree that the venture is not in a bull run. This is the longest bear run in venture history. It's literally at rock bottom. And so
pretty close. I mean, I experienced the bottom in a very visceral way, so I'm going to say that it is, and I'm going to say the bottom was January 20th of 2016, and I
okay.
I remember where I was and the conversations I was having. When I watched some of the greatest investors I know in the space, or several that I talked to that day, sort of giving up. And by April of that year, I had recouped on this particular portfolio all of my losses. In the 4 years worth of bleeding disappeared by April of 2016. And so you had to be in the right names, but it was that January was a pretty tough one.
It certainly was. I mean, I think there you go there. I mean, here we are.
470 was a number. And we went lower in COVID. I think we hit 390 or something. But of course, stock market crashes produce data which only skews the big numbers. And, the COVID bottom was short-lived. It was pretty tough.
Of course, we've got the mean shown on here pretty much.
Yeah.
And then
I love this chart. I think the visual capitalist guys came up with this years ago, and then
CJ,
and then Colin and the Palisade guys.
CJ, yeah, it's our man. Yeah.
I have a guy who does this for me as well, and it's there's some art in this. You have to think about exactly when it stopped going up and when it started going down, and there are periods when you're moving down here that in theory could be red or blue, but yeah, it's a great picture.
Yeah, it's just, I mean, in some ways we're happy with the gold price, but in some ways it's just the venture's not performing. And so it's like, when does that happen? When are we going to see another bull run?
Yeah. And so if you owned Aurion from let's say January 2016 to I guess as late as December of 2019, when it was the last time it was $2 a share, you didn't really feel much of this. If you own Novo Gold, let's say from the same period to I think, let's say 2019, I can't remember when Novo finally broke. You didn't really have this experience. And, Rick Rule often talks about this bifurcation where the good names go up and the rest of the stuff doesn't.
Yep.
If you own Newfound Gold, and I think you guys IPO'd in 2020.
2020, yep.
Yeah.
August of 2020.
I still remember it was 20 meters of 90 grams.
19 meters, 93, yeah.
Yeah. Let's round up. I still remember Christina showing me that hole.
Oh yeah.
I was in Vancouver, and we were all at the Pac Rim for some. I think it was the January conferences. I think that's what it was for. And anyways, I think she was involved in the story at the time.
Yeah.
And Russell Starr came over, and he was with Ivan Bebek and Oren at the time. And he's like, yeah, we've looked at that, and it's we think it's smearing, and we thought about doing it in Oren, and I greatly respect those guys. Ivan is, indefatigable and a monster, and has done a great job with a very difficult hand of cards up there in Nunavut.
Yep.
Done a great job transforming that business into multiple companies. But anyways, it was interesting. But I remember seeing that hole, and I remember all the foofara around Mexican gold and whether or not Colin was getting too much of a lift on that, and then it went to direct IPO, and it's a great story. And again, these shareholders have not experienced this.
Yeah, that's true.
Yeah.
That's true.
So it's interesting.
What catalyzes?
It's a stock picker's market, which is why I love being in this market. You can actually get paid to pick stocks.
Pick them right.
Yeah, not ETFs, not just don't the broader markets of the narrative, which has destroyed small cap for the most part, other than these things where you've got management teams who pull all the levers well. You guys, your financial engineering was spectacular, and I mean that in a positive way, and that's what we did at Orion as well. Only we had to start with a broken company and buy it all back from the people who were quitting first. But you kept it private for a long time. You brought it out with a great IPO and great capital, and you had the media lever working well for you also.
Mm-hmm.
And you brought all the right people, and you've kept them there. And the idea is new and big and high grade. And so that is an ideal product if this is a market for financial products. So it's great. You can get paid to pick stocks in this market. And it can be as simple as understanding, that maybe if you don't have that, okay, you could still make money, but that's the holy trinity, really, when you think about it. And that's philo mining as well.
Right. So you think, is it fair to sum it up, and you think that the market is working efficiently right now, or there is an audience there to be captured right now if you have the right product to sell them? If that narrative speaks to
Lithium.
Right. Well, yeah.
Patriot Battery Metals, Francis McDonald at Lyft. Taj is having a nice third life here. From Timmins, Timmins to the old Levon Silver assets. What are they called? Discovery Silver?
Yep, Discovery Silver, yeah.
Where he did a phenomenal job getting, I've known Taj for a long time, and he's had a volatile career, and I really count him as a friend. I love the guy, but obviously, again, volatile career. What happened at Timmins Gold, which, it was really not on Taj.
Yep.
Was sort of a travesty, and then he was a director at GT Gold, which was an interesting story, an interesting governance story, because of course there was some controversy around the choices Ashwath was making there, and then K2 showed up and they bought a big slug of it and they got it sold to Newmont, despite potentially objections by management. And Taj was involved in that story early on, and part of the good parts, he was there for a lot of the good parts of the story and for some of the difficult parts of the story. But what the job that he did getting Eric to embrace the old Levon assets, which were very well known, massive low-grade silver.
It was always, there is so much metal in the ground. That was the old, adage with that. And then you had who's the silver tooth guy that was the CEO for a while? Do you remember that? And the other guy with the cowboy hat? The Levon.
Anyway. I did know the predecessors, although there were a couple of guys in the States, if you'd meet them at a conference, and they would have guns on them. You know,
Yeah,
they'd be carrying
I think
handguns.
it's those guys. I think it's those guys.
Trey Wasser too, I think.
Yeah.
But so Taj really was the marketer who transformed this into something that was something Eric could embrace, and brought Eric in a very profound level, or in a very profound way, and delivered $1 billion value to the shareholders and price appreciation from 30 cents to $3. I was trying to get Gernot Wilbur to come over to Aurion. I had known him for years after he got kidnapped in Colombia.
I want to get him on here to talk about that.
Yeah, I don't think he likes to talk about it, but
Probably not, but-
we were pretty good friends. And you know, I'm not a hard sell guy. I just said, hey, listen, Mike really needs some help here. What are you doing? We talked a little bit about it. He had just left Oban Brave or Cisco maybe. I think he had some difficulty because he didn't have a license in Quebec, and there's maybe a bit of chauvinism there as well. But I really thought he was a great geologist and a good man. And so I said to him, in one of my many moments making a public statement that makes me a jackass, I said, look, you know, it's an interesting story, but it's just going to get diluted to smithereens. So just make sure they pay you well, because your stock options are never going to be worth much. 10x.
Yeah. Ooh.
10x. Yeah. And I have a similar story actually about the boys who generated Olympus. So so Braden St. Pierre and Drake
the
Hyden,
Snake. Yeah.
worked for Aurion for a while, and they would come into camp. I would come into camp, and you know, I was often there bringing majors in. I try not to bother the guys in operations. The way I think about these companies is, I'll get you the money, and I'll try to make sure that investors are looked after, and you guys just deliver the work in the ground. And we'll have to talk on a regular basis about how markets are performing, so that we can reduce the expenditure or kick out non-necessary investments that we're making in big geophysics or something like that, or whatever. So we'll kind of mate finance and operations in that way. But otherwise, I leave everybody alone. But I would always come out with Kinross or Newmont or
Sure.
Any of the other big companies that were out to site. And so I'd come into camp because we'd have a major coming in, and Braden would be so keen to pitch me what they were working on. And I'd met Drake. I'd given a talk on resource finances at some Toronto Geological Student Society or something, and Drake somehow got my phone number and email there, we talked a lot, obviously, and I was happy to know these young kids who were so ambitious. Anyway, so they're leaving camp every July when everyone goes on vacation in Finland anyways, and going up to the territories to stake ground with government grants. And they were really, really proud of this, and I was proud of them. I thought
They
it was
got hustle.
I thought
They
it was
had hustle.
I thought it was extremely entrepreneurial. And so they're like, "Hey, listen, can we just walk you through this?" And I'm like, "Absolutely. You're not going to get $1 out of me, but have at it." And so, you know, they'd take me through what they were doing and the ground that they were staking in, and I'm like, "Look, I love this." And I just say that it's never going to work, but keep doing it. It's the surface of the moon. Sabina is not working right now, and once and if Sabina ever works, Nighthawk is going to have to work. And I think Hope Bay was going through one of its periodic death rattles or near death experiences at the time, and none of it. Committee Bay wasn't working for Ivan, so I'm like, look, this is awesome, and it's so low cost, and you're effectively getting it for free, and that's because it's worthless. But listen, don't stop. I love this, and I just say, you know, make sure, you know, like if you find ground you really like, maybe you should just hide it and not stake it. Maybe you don't need the holding cost, because the longer you hold it, the longer you have to put money into it, the more you'll get affected by the sunk cost fallacy. And then, you know, one day you won't be able to sell it because you have so much personal money and time in it that you won't be able to name a rational price. And so, so I said, but look, awesome, and keep doing it. And then, of course, they call me, I think it was during the COVID year, to let me know, yeah, we got this, like these Palisade guys are interested in the package. And I'm like, okay, well, what does that look like? And they're like, well, we're going to do this, and this. I'm like, okay, who's your lawyer? And they're like, oh, we're using this guy, this business lawyer out of Timmins or something. I'm like, okay, no. So I got them Graham Scott.
Oh, okay. Yeah.
And I called Graham. I said, look, there's no money in this for you, but can you just do me a favor? These boys are about to do something, these boys are about to do something without professional advice, which is a rule that I would never break. So anyways, I hooked them up with Graham, and midway through the process, they called me and said, oh, like the Dundee guys are really interested in this. And I'm like, yeah, I'm not surprised. Once something becomes of interest to someone, it often becomes of interest to others. And they said, in this instance, we would be they'd raise us some money, and Braden would be the CEO, and maybe Drake would be the blah blah blah. And I'm like, no, there's no better model in this business than stake and vend, and you'll get a little bit of money, you get a little bit of hard dollars and a lot of flow through, and you'll effectively just be manufacturing a warrant for these guys. And I like and respect them, but you will waste your career going to investment conferences, which you will like for the first 2 years, and you will destroy your opportunity to keep going out in the field, keep learning from people who are deeply experienced, who will mentor you, and keep developing your career asset as scientists. You do not want to be the CEO of a junior shitco, for want of a better term. And so we talked a little bit about the terms of your deal, and I'm like, yeah, no, that's the deal you should take. Those are good guys, and maybe the stock will be worthless. Maybe they'll dilute you to smithereens. And I gave them some advice about how not to make that happen. And I listened to your Golden Planet episode, and I am just so thrilled for those kids.
Oh, it's awesome.
Yeah,
it's an awesome land package. It's still the surface of the moon.
Now, you guys made it much bigger.
Yeah.
But Sabina has now cleared.
I know. You know what? It's asleep. It's asleep in sleep mode. I did offer those guys, I think we did a fair deal.
They did a great deal for them. Yeah.
And was
it like $250,000 cash too? I mean,
yeah, it was a good deal. I don't know if it was a quarter. Yeah. I forget if we did $250,000. It was $1 million probably all in.
Yeah,
I think it was like $1 million, $1.25 million.
Yeah, they got a cash payment that changed their lives or paid off their student loans.
It was
divided
a big deal.
by 3, and they got stock, which
And I could have only dreamed at my age to be to have the vigor, the gusto, the government grants,
It's great.
I like the hustle,
Yeah,
those guys.
They're
I was talking to Drake yesterday.
Yeah, they're talented young guys, and they got the right start in this business. Because you look, by contrast, Francis.
Yeah.
At Kenorland, Francis and Zach, in my opinion, gave up too much of the Frotet discovery before going public in this Sumitomo deal. Which, when I looked at it, I thought, well, they're just going to end up with a 2% NSR. Mm-hmm. They can say they won't, but I'm not sure that I see how they'll avoid it. And I thought that was an example of the venture capital protecting its own upside and steering them in the direction of a joint venture, which was prejudicial to their own interests and helpful to the 5-cent or 10-cent stock that Zach sold to the guys, the venture capitalists who put him up in Vancouver. And Francis and I have talked about this, and Francis is an awesome guy and one of the great young scientists in our business, and I just love Francis. And Zach, same, great kid. And they've convinced me otherwise. They've told me about the soil program that they had to run in order to generate the anomaly and the cost and size of it, and that they really needed Sumitomo for that. So perhaps my view of it is incomplete or incorrect. But, now I'd say those guys are thinking more about how to keep more of the upside for the original shareholders, including them, the founders, and this lift. I mean, they both, I think, personally done extremely well on lift, and of course, so has Kenorland, and looks like there's a lot of upside for Lift's original shareholders as well.
I too like Francis, and I think I agree with everything you've said. The joint venture business is tough. And I think it's one of the things I've always avoided because I knew that at Pine Tree, it was just unfinanceable from either side.
There's of all of the, if you assume that of the capital available on the globe, there's whatever 50 trillion or 100 trillion or whatever it is, I'm not sure what the number is. And you start to slice it up into the amount of capital that's available for various opportunities. Bar none, natural resources gets the smallest slice of the global pie, global capital pie of all sectors most of the time. And I think certainly we have the smallest, tiniest sliver right now. And then if you go to the prospect generation business, that gets the smallest slice of that small slice. There's a very limited investor appetite for that, mostly driven by Rick Rule's promotion to his own clients in San Diego. And so there are some real devotees of the business who have, really big money. And some of these businesses have been phenomenal successes because it is a very good way to manage your capital. Generally, the ones that have done really well, though, have pivoted. And they've used prospect generation as a way to sort through opportunities. And then when they finally find the one, and this is what happened at Aurion.
This is what happened with us, too. This is what I've done with all of the businesses. Yeah.
So Mike hit the boulders, and I want to hear your story. Mike hit the boulders. Stock goes up to $2. And we had agreed, rule of thumb, but, it's totally it's there's no rule. It was our decision that if you could get the money to answer at least the 3 most important unanswered questions and give away 10% of the company or less to get that money, and that of course was going to mean drilling and therefore a fair amount of capital. If you could get that money and have a little bit left over if you failed and give away 10% of the company or less, then the market was paying you to go after the property. The market was giving you that signal. So that is, and Mirasol pivoted in just after 2007 into Virginia, this high-grade silver thing. They went to $7. They sold one of their properties to Coeur d'Alene for $65 million. San Joaquin, I think is what it was called. Almaden had gone from a penny stock to a multi-dollar stock, pivoting to sole risk exploration on Ixtaca. And there were, Arequipa was a pivot. It was a private, just like Newfound Gold. And they just kept optioning off these porphyry properties in the Andes. And then finally they stumbled on Purina, and they took a little show called Thumper Resources and went public on Purina because, they felt like this was the place for them to go.
Yeah, we flipped out. I mean, we flipped out the Athabasca Basin. We were the first in the Cobalt Triangle, pre-Cobalt boom. So we ended up buying out Consolidated Professor Mines, which had a portfolio of all the patented land in the Cobalt Triangle.
I see.
So that was a huge. That really fueled a lot of the growth that we had in the core districts that we wanted to focus on.
It's a great way to generate capital if you can stay disciplined. It's a great way to generate capital to take that risk on a program.
Yeah.
Even Jack Stock does this from time to time. Everybody's critical of Globex, and I've known Jack for years.
I was very critical of Globex, but I was also trying to be respectful too.
Came into my office in 2014, and we talked a lot about his business, and I thought, okay, I see the problem here. He's a stubborn, egotistical guy who lectures the street on how he's running a business. But I liked him a lot. And this Mid-Tennessee zinc royalty that he had, I was sure was worth at least the market cap. So I bought 1 million shares for 15 cents the next day. And I think I got up to 5% of the company at one point, gently in sub 20 cents. And he and I would have lunch.
In Globex.
Yeah. He and I would have lunch and coffee every 4 or 5 months, and he'd proudly tell me about how he didn't sell Duquesne to First Mining Finance for $8 million worth of stock. Sorry, for $4 million. And I'm like, why? He's like, well, I wanted 8. And I'm like, well, you're an idiot. You're going to go do a flow through here, and you're going to give away all of these assets or some portion of them at a tiny, tiny fraction of that value because you're too stupid to sell that property to Keith. And of course, that was before First Mining had its run. And so we talked for a long time about his problems, and eventually he drilled a discovery hole in Chibougamau independent mines, and I went over 10% by buying a few shares. I was already at 9.9, and I said, look, just give me a board seat, and I'm going to help you do this intelligently. And so I'm a board member there as well.
Oh, you are?
Yeah. I'm.
Oh, so you're probably pissed about all of the commentary that I had? No,
no. I haven't heard any of it. Are you? Are you anti Chibougamau or anti Jack or something?
No. I had a whole episode and I covered. I thought maybe you listened to it.
No,
I was critical of the Globex strategy.
Yeah,
not of the strategy. I was critical of the scalability of the company.
Yeah.
It is a business. which a lot of them aren't. And that's
Sure.
something I can give Jack all the credit in the world
Yeah.
for, is running it like a business.
Sure.
But I think, there's a lot of people that get lost in it. Anyway,
Yeah. I tried to get Vince Medcalf to go over there years ago after he left Cisco. I thought that all Jack really needs is to have a personality like that come in and ratify the model. And Vince and Jack are friends. But I mean, Jack told me a story, Patrick Langlois at Probe told me a story about being at National Bank and offering Jack $4 million from the case. And Jack said, "What's your commission?" He said 4%. And Jack said, no, 3%. And Patrick said, "Well, I have to ask permission." He went and talked to his boss, and the boss said, "Okay, we can do 3%." And Jack said, "Oh, that was only good for 5 minutes. Now it's 2." And I'm like, what an idiot,
Yeah.
And penny wise and pound foolish. And listen, again, I love Jack, and we're good friends. I sit on the CBG board, and I asked for that board seat because I think there's something to do there in that camp, and I wanted to make sure it got done. And I own 17% of that company.
That's the CB. So you're
Chibougamau Independent Mines. Yeah.
okay. Are you on the board of Globex too?
No, I'm not.
Oh, that's what I thought. Okay, sorry.
Yeah,
okay,
And nor would I want to be, because again, I like Jack. I don't want to be constantly having fights with him about what he should do. But I will say this: he's done a great job so far.
Yeah.
It for all the people who've been frustrated with the company's lack of promotion, he sold that zinc royalty to Brendan at Electric Royalties for $18 million, like $13 million of cash and $5 million of stock and warrants, which I think will be valuable because of the Sayona lithium royalty. And this Francoeur Arnfield thing that he sold to Yamana for $15 million, when he generated that property for like $500,000 and then got some coring operation to pay him the $500 to take sterile rock off of it. And then over the years, put a little bit of flow through into the Wasamac trend on there and upgraded the land package. And then eventually, when Yamana bought Monarch, there was no land for them. They actually, in addition to needing to buy what might be the continuation of Wasamac, they had to buy, they really needed the surface rights or the surface access that he had. And so he's done a phenomenal job of finally getting this to the cycle where he's able to become completely independent of capital markets. And what
100%.
What destroyed the company for all those years is he kept doing small flow-through financings with these funds that wind up every year. He loved Jerry Brocklesby. He's always taking money from ArcWest.
Yeah, so Jerry will give him the money and then toss it out, and away you go. Yeah,
gone. And I walked him through that, and he was unaware. And,
he didn't know that. Yeah.
Yeah, correct. And so anyways, and that's kind of what I do with all these companies. I'll just say, okay, I don't want to do this, but I own 10%. So let me just help you out on how you think about financing. And so let's just do away with these stupid flow-through deals. And if we do flow-through, it's going to be a charity back end. And we're going to know the investors, which is ultimately your greatest defense. If you are putting the money with true investors, it isn't going to move whether it's flow or hard. And then helping these companies understand, if you never get away from your venture capitalists, your stock will never go up. Mm-hmm. And for all the guys who tell me, Rick Rule and David Elliott and you name it, they're great shareholders. They're my shareholders. Never sold a share. It's just like, that's a problem.
It's a problem. Your story needs to be able to something that can resonate with the.
You've got to stop raising money from those guys, and you've got to build value and get the next guy to pay more because he's getting something more valuable and less risky. And again and again and again, if you never get a distribution event for your venture capital, you're a 20-cent guy at best for life. And a lot of these guys don't understand that. So I just, from time to time, come in and sort of help them with that and decision making there and with capital too. So
yeah, I mean, I guess my comment with Jack was, hey man, it's a private business. I think it would be it's a great to me it's a private business. It's like it's a business.
Well, there's a major succession issue coming there, I think, and I've talked to Jack about this over the years, and Diane's on the board of Chibougamau as well, Jack's wife, and so there's two businesses there. There's a massive collection of royalties that are slowly coming into the money over time, and then there's his property package, which every year he generates money, shares, and royalties from, and he loves that business. And so just as Andre Gaumond merged Virginia with Cisco so that he could get his liquidity event, but continue to run his exploration business from a larger platform, but step away over time because there's still a bunch of stuff in Virginia like Coulomb Massif and other stuff and a team. But Andre knew it was time for him to find a home for the business because he didn't want to continue to run businesses anymore.
But Osisko bought it and then puked out the assets.
They did. Well, they bought it. They wanted the Eleanor royalty.
Yeah.
And they probably didn't want the rest of the business, but they had to take it in order to get it. And so for Jack, I've always thought, well, it's going to have to be the same way. And I've talked to Jack about this. I don't know who the right home is going to be. I have some thoughts on that, which I'll keep to myself. But I think the right solution for that business will be for it to marry up with a better, larger, more liquid royalty company, and Jack can continue to do his generation business until he sees fit to go home.
There was a time where I looked at it from a possible M&A fit perspective. My problem was that I didn't really have if I would have got into the prospect generation aspect of the business, it would have run conflict with my consultant.
Of course, yeah.
And so that's where it was like you got to pick your poison.
Yeah.
But it's a Frankenstein. It's cool. It's a great business. Jack's done a great job. He's getting older. Something's going to happen. And to me, it's a private business. I don't see a hockey stick in its future. It's just, it's not really one of those. It's a great business to have. I
agree. And I think, the other possibly transformational moment would be bringing somebody like Vince in. And Vince will never go there. Vince was ready to build his own business, and he came out and teamed up with Joe and the Medalist guys and started Nomad, and they turned it into $1 billion business and got it sold to Sandstorm in the blink of an eye. Those guys are superstars, but somebody like that who doesn't yet have that ability might also be a solution. But 227.
Dave, I could do it all day.
Yeah.
Thank you so much for coming in.
Thanks, Dan.
And let's do it again.
We'll do it again.
Great. All right. Well, thank you.